Ever wondered how a property, unchanged since the 1960s, could still command a price tag of $18.9 million? Welcome to the Commercial Real Estate Insights Podcast. I'm your host, Steve Hamoen. Let's get right to it. In an intriguing development in the world of multifamily properties, the Hamoen Manor apartments have been sold for the first time since their initial development in the 1960s. This transaction has fetched a notable $18.9 million. The sale marks a significant moment in the history of the property, reflecting the enduring value of well-located multifamily units. The Hamoen Manor apartments, with their rich history and long-standing presence, have been a staple in their community for decades. Their sale not only highlights the demand for multifamily housing, but also underscores the potential returns such investments can yield over time. For the new owners, this acquisition represents an opportunity to revitalize and potentially reposition the property in today's competitive market. This sale is a testament to the strength of multifamily investments, a category that continues to show resilience and growth. The transaction adds to the narrative of how multifamily properties remain a cornerstone in real estate portfolios, offering stability and the promise of future appreciation. While this sale took place outside of our usual focus areas like Kitchener-Waterloo, London, and Cambridge in Ontario, it provides an interesting point of comparison for the Canadian market. Multifamily properties in these regions have also seen a steady demand, driven by factors such as population growth and urbanization. In the United States, similar trends can be observed, highlighting the cross-border relevance of such transactions. JCMLiving, a family-owned real estate owner and operator of multifamily communities across the East Coast, recently announced 2 retail lease signings at Rosera Wesmont, its newest luxury residential community located in Woodridge. Mathnasium and All-Star Pharmacy will soon occupy ground-floor retail spaces within this resort-style residential project, which welcomed its first residents this past spring. The leases are part of 3,000 square feet of retail within the building itself and over 17,000 square feet of retail space in total within Rosie Square. Andrew Weissman, the director of North Jersey at JCMLiving, emphasized the importance of selecting tenants who add real value to the daily lives of residents at Rosera Wesmont and the larger Rosie Square community. Mathnasium Learning Centers has entered into a 5-year lease for a 1,410 square foot retail space on the ground floor, with an anticipated opening date next month. Founded in 2002, Mathnasium specializes in mathematics instruction and serves students from pre-kindergarten through high school. The company operates over 1,000 learning centers worldwide. All-Star Pharmacy, founded in 1984, secured a 1,330 square foot retail lease on the ground floor for an initial term of 5 years, with an option to renew for an additional 5 years. The pharmacy offers services including prescription fulfillment, medication management, and vaccinations, focusing on personalized, accessible healthcare solutions. In both lease deals, Camabees represented itself as the landlord. Mathnasium was represented by Garrett Aries at ESR Commercial, while All-Star Pharmacy was represented by David Towns of JLL Brokerage. Situated at 200 Rosie Square in the Aviation District of Bergen County, Rosera Wesmont offers 295 residences and is conveniently located near the Wesmont train station, providing a 30-minute ride to Manhattan. The project transformed a historic World War II-era aircraft facility into a vibrant residential neighborhood. Originally, a massive Curtiss-Wright aeronautical plant operated on the site, producing aircraft engines from 1942 throughout the war years. Turning our attention to the bustling commercial real estate scene in Dayton, Ohio, recent transactions have culminated in an impressive total of $115 million over a mere 7-day period. This surge in activity is a testament to the region's dynamic market, offering valuable insights for investors and real estate professionals alike. The Dayton Business Journal's managing editor, Nicole Mistretta, reports that this flurry of transactions highlights the robust demand and strategic investments being made in the Dayton area. While specifics of each deal remain under wraps, the sheer volume of activity speaks volumes about the confidence investors have in this market. For our Canadian listeners, particularly those focusing on areas like Kitchener-Waterloo, London, and Cambridge in Ontario, this activity in Dayton may offer a point of comparison. The similarities in market dynamics, such as population growth and urban development, can serve as indicators of potential opportunities across borders. As we continue to monitor these developments, it is clear that commercial real estate remains a pivotal component of economic growth, both in local and international contexts. Understanding these trends is crucial for anyone looking to capitalize on the ongoing shifts in the market. Let's turn our attention to the vibrant yet challenging retail sector in Hong Kong, as reported by Savills. The second quarter of 2025 has seen continued pressure on the market, largely driven by the strong Hong Kong dollar and the allure of more affordable retail and dining options in mainland China. This has led to significant outbound spending by Hong Kong residents, impacting local retail sales. Despite a 16% year-on-year increase in same-day tourist arrivals, this uptick did not translate into substantial sales growth. Retail sales only saw a marginal stabilization in May and June, with a negligible 0.3% overall increase for the quarter, failing to counteract the structural decline that began in March 2024. According to a study by the Chinese University of Hong Kong, over two-thirds of Alipay HK's active users, amounting to 4.5 million people, regularly spend in mainland China. This shift is evident with nearly half of their expenditures directed toward services and 28% toward retail, highlighting a significant drift away from local consumption. The first half of 2025 witnessed over 300 retail shop closures, with the food and beverage sector being hit the hardest. Notably, 70% of these closures were food and beverage outlets, including 23 local restaurant chains. The cinema sector also suffered, with a 16% drop in total revenue year-to-date, leading to the closure of 10 cinemas. However, amidst these challenges, some positive trends have emerged. Budget-focused retail concepts are expanding rapidly, with international value retailers entering the market. For instance, the Japanese household goods store 3 Coins recorded significant sales at its first Hong Kong branch. Local players like T.Momo Shopping Mall are also thriving, planning numerous store openings targeting residential areas. In the food and beverage sector, new concepts like two-dish meal takeaways are gaining traction, offering affordable meals in residential and office areas. Financial services are also contributing to retail demand, with online trading platforms expanding their physical presence in prime locations. The influx of high-spending visitors during major cultural and entertainment events has also provided a boost. Events like Complex Con, Art Basel, and the Hong Kong Sevens have drawn significant crowds, pushing hotel occupancy rates in prime districts to 90% and benefiting the retail sector with increased foot traffic. Looking ahead, large-scale infrastructure projects such as the Skytopia development, the Hung Hom Promenade revitalization, and the upcoming Victoria Cove waterfront district are set to enhance Hong Kong's appeal as a global lifestyle destination, integrating entertainment, culture, and premium waterfront experiences. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.